Hi, everyone. I'm James Garbutt.
And I'm Denny Dumas.
And this is the Garbutt Dumas Real Estate Podcast. All right, we're live. Carl, okay, recording. This is James Garbutt going solo on this podcast. Now, usually I have my partner in crime, Denny, with me, but he had to run off to an inspection. So just so you're aware, this one, we're just going to talk about what's been going on in the market, what I've seen, what I can share that might give you some juice on what to expect over the next few months. The fact that Denny had a 7 a.m. inspection on Wednesday kind of shows where the market's at. That was the only time the inspector had available. And our inspector, Dave Brighton there, he had a record month of inspections in August. I think he cracked 70 inspections in August, which is insane. So one thing that we want to mention is the market hasn't slowed. If anything, right now it's picked up. I think it was on Monday, our team had 5 accepted offers. And I just want to kind of share some of the products that we're seeing that's hitting it and some that's missing it, because everything's moving a little differently. A couple things. Bidding wars. Some highlights. We have some frustrated buyers looking for 1-bedrooms in East Vancouver. And these particular buyers have run into some insane bidding wars of, the latest one was a $699 list price property on East First that sold for $800. And I think it got 11 offers or 7 offers or something crazy. So clearly 1-bedroom condos with a Vancouver address are popular. But once you get out to, say, the suburbs, 1-bedrooms seem a little less popular. So the market as a whole is active and I'd say more in favor of buyers and trending upwards as a macro thing. But on a micro level, the 1-bedroom market in, say, Victoria Hill, New West, or in, my guess is, say, Poco or Langley, is doing very different things than a 1-bedroom market with a Vancouver proper address. In the suburbs, 2-bedroom condos seem to be a little more active than 1-bedrooms. 1-bedrooms are not doing poor. Don't get me wrong. A 1-bedroom loft in Morano Lofts, very desirable still. But 2-bedrooms across the board are just more popular. Most people are moving out to the suburbs for more space, and a second room is more valuable in this day and age, and it's proving that way. So not that we're seeing bidding wars for 2-bedrooms, but we're more likely to see quick sales. And right now we have a few products that are just hitting, whereas this is September, 2nd? I don't even know what the date is. September 2nd. So we have a few 2-bedrooms hitting around the 600 mark, and that's going to tell us a lot of what's ahead. Now, in New Westminster specifically, these 2-bedrooms that say we expect to sell at $575 may have peaked at the very highest part of the market in 2018 at $600. So we're not far off peak pricing. I'd say with maybe 5% off peak pricing as a whole in New West, but areas like Mount Pleasant, Vancouver, they're at an all-time peak pricing. They're insane. They're busy. Some other products that we've run into lately that have definitely picked up in action is detached. The trend, there's not enough, let's call it under 1.2, where a lot of people are making the leap from a condo or a townhouse getting into detached. The supply is low. I'd say the supply is arguably low from 1.2 to 1.4 as well. The higher the price point you get, the more supply, the more it works in the buyer's favor as opposed to the seller's favor. But right now it feels like a seller's market for detached, especially in the lower price points, low supply. And if I'm saying there's low supply, a lot would have to happen in September for that to shift. There would have to be a lot of listings flooding the market. So my guess is, for detached, based on the supply and demand that I am seeing as of September 2nd, I'm expecting to see a lift over the next 6 months. I just don't see enough supply, and there's far more demand. I don't necessarily see a lift for condos across the board, but for detached entry-level price points, I think it's trending upward right now. 2 examples, builder products too, good lots on a good street. There was 2 examples in New West, one at 307 7th Ave, 921 Chilliwack Street. And this applies to other markets, but these are both priced under 1 million list price, 6,000 square foot lots on a good street. So you can find, similar products in Burnaby or Tri-Cities that would have a similar impact. But these 2 both got 7 offers, and they're total land value. There's no house value there. They are ugly, but they're going to be redeveloped. And they both sold for more than $100,000 over the list price. That would not have happened in 2019. They were arguably underpriced at like $980 and $999 or whatever it was. So it was anticipated that they'd get bid up a lot, but not 7 offers subject free. And I think one went for 1.11 and the other one went for 1.125. So builders are back on good streets. Detached is booming in the entry-level price points. And even the higher-end suburb homes are starting to pick up some traction. Government Road has been seeing lower days on market, astronomically lower days on market for detached homes in that sub-area compared to last year. Government Road, I use that as an example because it's notorious for high price points, and that market gets really soft with those high price points when times are slow, and it can get hotter when times are good. It was really hot in 2016, but honestly, the homes are just too expensive to be hot right now. And lately they're starting to move. So the luxury detached homes are starting to trickle out. North Shore is loaded with them. Burnaby is loaded with them, but I still feel like that's not a market that's trending upwards. I feel like that's a market that's just starting, the good stuff is selling, and probably more than half of it is still overpriced. Rates are at an all-time low and stock markets are at an all-time high. When those two combinations hit, it is hard to think that prices for real estate are going to backtrack, especially when we're looking at a lot of detached examples where the house prices were around the same price 5 years ago. Not everywhere. That's more of a luxury detached thing. But if it was, a $1.5 million home today was probably $1.2 or $1.3, $5 million, or $1.2 or $1.3 5 years ago for like a North Burnaby example. But a $3 million Burnaby home was $3 million 5 years ago. And so that was because it was inflated, a lot of foreign wealth as well. But what I see from that is there's not a lot of gain over the last 5 years for detached. And there's a lot of stock market gain, and there's low interest rates. A lot of uncertainty with unemployment moving forward, but I feel that when you look strictly at the supply and demand, it's telling me everything about trending upwards. So if I were to have my crystal ball out, Carl, I'm going to guess that detached is going to be more expensive next year. Yeah. That's about it, guys. I think townhouses, there's not enough of them. It's condo market in suburbs, let's call it New West Tri-Cities. I'd say it's balanced. There's certain segments that are seller markets. There's certain segments that are buyer markets. Insurance is a factor. Strata fee is a factor. It's not the time to sell the ugly place necessarily and get top dollar. But if you have a very desirable condo, you could absolutely get peak pricing. The good stuff is getting a lot of interest. It's the cookie cutter, mediocre stuff that hits it or misses it. But they need to be assessed on individual bases. So if you want to get an assessment of your property, reach out to us, send us the address. Hopefully we can help. I think that's all I'm going to share for now, Carl. That's my September 2nd market update. Thank you.